Thank you for tuning in today. We are diving into a world without business credit. This is actually going to be pretty interesting training because you're going to see kind of the tale of two worlds, basically. I don't think that's right. But anyways, you're going to see what it's like to live a world if you don't have access to business credit and the solutions that you might have to be able to get money then versus a world where you have business credit and you can actually see how much easier it is to be able to get the capital you need to grow. So for those who don't know me, my name is Ty Crandall. I'm CEO of Credit Suite. If we can help you along the way, I'm going to put information at the bottom of my slides to get credit monitoring really affordably, to also be able to get a free guide that'll help you, and even our phone number to get a consultation to learn more about building business credit for your company. So remember, when we talk about business credit, we're talking about credit that's in a business's name. We're talking about credit that's linked to your business EIN, not your personal social security number. Okay, so it's directly connected to the business's ability for the business to pay its own debts. So when we talk about commercial credit, when we talk about business credit, what we're basically doing is building a credit profile for a business that's then used for that business to qualify for all kinds of money on its own without needing your personal credit, without needing personal guarantees and with your attachment. Okay, it doesn't relate to your personal credit at all. And as a result, this credit scores are very different when we talk about consumer and commercial credit. We'll be talking about some of that today. But what if there were no business credit? Dun & Bradstreet came around back in 1841. Okay, so let's picture a world where they never existed. Equifax, to give you an idea, 1899, Experian, 1996. And they were, again, never founded either. If they were never founded either on the commercial world, let's look and see what would happen if this never came around. If we had consumer credit, but we didn't have commercial credit, what would your business look like? And here's why I think this is interesting, because this is a pretty cool thought exercise to say, what if D&B never existed? But the reality is, a lot of business owners, a lot of you even watching this, may fall into this category where you're running your life without business credit. So it's a good look to see how you're able and not able to get capital now without it, and how you would be able to if you did have access to business credit. So how are companies founded? Well, entrepreneurs need to start and get other funding to be able to grow a business, right? We all know that. It takes capital to grow a business. And the reason for that is because when you start a business, it's not generating any money. Okay. And most people to start businesses wait months or years to even be profitable. So during that time where there is no money coming in to cover the expenses to run the business, that money has to be paid somehow, some way. Okay. So let's look at what that would look like. If an entrepreneur has the money and they can finance the start of the business and they have enough, well, they can technically keep donating to the cause until the business is profitable. So that's one way. Maybe you don't have business credit. And the alternative is that you're going to use your own personal money to fund the business. You're taking money from your bank account. You're taking money from stocks and bonds and IRAs. It's one possibility. It's technically possible for you to fund a business till it's profitable. Again, the things to keep in mind here is that most businesses go 2-3 years before they're profitable, okay? So as a result of that, it's even harder in brand new industries. You're funding a business using your personal funds for a considerable period of time. Businesses eat cash like a vacuum cleaner, right? We've all seen that. It's very tough to run profitable businesses because the amount of money that we have, the business will expand and will absorb every ounce of money that we have available for it to do so. So again, going 2-3 years using your own personal funds, not exactly an easy thing to do, but it is possible. Maybe you're doing that now, using your own personal money to be able to fund the business. Now, if you're in a new industry, for example, well, we could be looking at venture capital. It's definitely a possibility. Venture capital tends to look at businesses that are in a new sector, that are in an existing sector, but that are way different and have a very unique niche that can really help them propel to become billion-dollar plus companies. Okay. So after all, it wasn't long ago that if you said people would pay to stay at another person's home or to be driven in their car, that these things were possible, right? So we've seen Uber, we've seen Airbnb take off. So venture capital is one option that you could use to be able to fund a business if there wasn't business credit. But the problem is that venture capitalists want a pretty large stake in your business. If you've ever seen Shark Tank, sometimes they want 100% of the business. Sometimes they want 30, 40, 50, 60% of the business. Okay. And if you don't want to give up the majority stake of your business, then it's really tough to be able to deal with venture capital. And they typically want to control the funding for you, and they want to control the business. They want a seat at the table. They want they want to be on your board of directors. It's interesting because being on the Inc. 5000, we get solicited all the time by venture capitalists. I mean, all the time, like literally I get about 3 to 8 solicitations a week for venture capitalists. And one of them I got the other day was just blatant. They said, look, it's not even about the money. We just want to come in and use all of our expertise to help you. Basically in a nice way saying, hey, look, we're going to push you out of the way and take our experience to take what you have and get it to a level that we think we can get it to using that. So in a lot of cases, venture capital wants to take the majority control, and you're giving up a large ownership stake of your business. And Aaron, thanks for coming in from Facebook. Juan, hello from YouTube. And Bismarck Sanchez, thanks for coming in from Facebook as well. So there's also angel investing. There's informal investors. There's formal investors. This is another way you can get money if you don't have access to business credit. Angel investors work as a startup. Okay, venture capital, usually they even want you to be generating some kind of revenue and profit. So that's tough to rely on that. But angel investing works right up as a startup phase of your business. They don't typically give you a lot of money, and they typically don't want a lot in return. They don't need a controlling stake of your business. They don't need to sit on your board of directors. So this is possible as well. And a lot of people that could be angel investors are people that were in your circle now. Okay, you could be going out, be good at networking, friends, family members. Those people are called affiliated angels, people that are affiliated with you. That's one way to get money outside of business credit, is you could deal with affiliated angels, people that you know in your circle to get money, mom, dad, etc. But then there's also unaffiliated angels too. And those are people that you're able to come and get from networking events and from actual angel investing networks and from places where angel investors are more frequently available. So that's possible too. If you're starting a business, you have a good idea, there's something that really makes you unique, you have a good plan, and you're good with people, then if you talk to enough people, you might be able to get angel investing. That is possible. But again, in a lot of cases, they're donating smaller amounts of money, $5,000 or more. So it's going to take a lot of them to get the money that it's going to take for 2 or 3 years for a business to really become profitable. How many of those people at $5,000 a shot give you enough money to be able to run the business successfully for years? So it's something to consider. But again, it is possible. Another possibility is crowdfunding. So you can get small amounts of money from a large crowd of people using crowdfunding. And, if you earn the amount of money you're trying to raise, well, then it can be very successful. But how successful are these? Well, Kickstarter, actually, this is surprising to me. About 1/3 of campaigns at Kickstarter end up being successful. And by successful, meaning they raise the amount of money they were looking to raise. So, 70% of these campaigns fail. They never raise the amount of money that the person's looking to raise. About 1/3 of them do. So it is a possibility. But the thing with crowdfunding you have to know is that, again, it relies on your network, your ability to share that amongst your audience and have a product or service that's unique enough for people to want to share it. If they don't want to share it because they think that what you're actually trying to raise money for on Kickstarter is amazing, then you're probably not going to succeed here. So, most service-based businesses, car washes, bars, restaurants, nail salons, those are not businesses that get money from angel investors, venture capitalists, crowdfunding. Most typical businesses that are service or retail related do not get money from these sources. Crowdfunding doesn't work for you. Angel investing, venture capital, those are unique ways to get money for something that is very unique, a new product, a new service, a new concept, like Airbnb, like Uber, that changed the landscape because it was a whole new way of doing things. If you're just trying to get into a typical business and a typical industry, you can't get money from these sources. But it's something to consider if you have something truly unique. Now, grants, usually they don't have to be paid back. That's a good way to go. And there's a lot of grants available. USDA, if you're talking about rural projects, you could go to HUD as well and get some grants from them. You could go to a Grant Watch. Grant Watch is a great place to be able to find grants as well. So you could do that. But again, a lot of grants are hard to come by. A lot of people are applying. They're complicated to apply for. You've got to, again, meet a lot of criteria to be able to even get approved. The government has some of these. There's sources that are from private individual as well. But again, it's just something to keep in mind is that these are extremely competitive. Everybody wants free money. So when we talk about community and urban development type of grants, these are very popular. They're often used. They're often recommended by state and local municipalities. So as a result of that, it never hurts to ask. Grants are a great way to get money. But when you're ever getting into the grant space, you have to expect that it's going to be fairly competitive. Now, SBA is another way that you can get money. Right now, the most common SBA loans are the PPP, the EIDL. That's what's been kind of occupying the news for the last matter of months. But beyond PPP, there are other programs that SBA offers as long as you meet the eligibility requirements. The problem is that SBA relies on business credit to approve you. They use a FICO SBSS score that goes as high as 300. And the issue is that you have to have a 140 score to get to have a score high enough to qualify for SBA. Your bank won't even send the loan into SBA if you don't have that 140 score higher. So the problem here is that, your FICO SBSS score takes into account business and consumer credit. So the reality is, since SBA requires a FICO score of 140 or higher, and you cannot mathematically get that score with you don't have any business credit established, SBA loans won't work for you if you have no business credit. You can't get an SBA loan with no business credit. And if Dun & Bradstreet, Experian, Equifax ever existed, you might see that SBA might not even exist, because SBA offers loans based on your business showing it has the ability to pay its bills. And if there was no commercial credit, or if you have no commercial credit, you can't rely on SBA loans. You can't get SBA loans. Now, there are community advantage programs for underserved markets. There are, funding from SBA, bridge loans, and things like that, and in areas that are disaster areas. There's a lot of options here. But again, it's very practical that if the commercial credit reporting world never existed, you couldn't get SBA, because today in 2020, if you don't have established business credit, you cannot get an SBA loan. So you have to kind of mark this option off your list. So far, we're talking about venture capital. We're talking about, crowdfunding. We're talking about angel investing. They only work if you have a unique product and service. It's not a service-related or retail-type business that fits into a normal industry. We talked about grants, but those are very competitive. We talked about commercial financing here through SBA, which you can't even get without having established business credit. Now, you can use your personal credit, but that's a terrible idea, because it puts more inquiries on your credit report. It maxes out your utilization. Credit cards that are issued to us as consumers are designed for consumer spending. The limits are way lower than commercial credit cards. It's one of the biggest problems if business credit never existed, or if you're not tapping into it, is that when you get a consumer credit card at Staples, they don't expect that you're buying thousands of dollars a month from them, because what consumer spends thousands of dollars a month at Staples? But they expect businesses to do that. So the credit limits on commercial credit cards are 10 to 100 times higher than consumer credit, because business credit cards were designed to fund a business. They're a way for your business to fund itself without needing your personal credit, without needing you personally to guarantee it. So if commercial credit doesn't exist, or you don't have access to commercial credit, then even if you try to rely on your personal credit, you're going to ruin your consumer credit scores, because the limits on your cards were never designed to be able to fund a business. And the inquiries on your score, where inquiries start hurting you, they are not expecting, like, a business applies for a lot of credit, a lot of financing all the time. Consumers don't do that. Like, we get a mortgage once every, I don't know what the average is, maybe 3, 4, 5, 10 years we get a mortgage. It's a big range, 3 to 10, I don't know. But we get a car every 2, 3, 4, 5 years. We get a new credit card maybe once a year, once every other year. Businesses, we're getting money all the time. We're applying for loans. We're applying for credit cards. We're applying for auto financing. So the inquiries on your credit report, if you're using personal credit to fund your business, all those inquiries that will hit your credit report will drastically lower your score, because those inquiries, the volume is abnormal for a normal consumer. And that's what FICO is looking for. They're looking for these abnormal statistics that show that you're using your credit in an irresponsible way. And let me be clear. If you're using consumer credit to try to fund a business, you are using consumer credit in an irresponsible way. That's why your FICO score will be damaged. Okay. And this is how I feel about people borrowing money from family and friends to be able to buy a home. There's a reason you need a down payment when you buy a home. It's because you need to show you're responsible enough to save money. Because if you need a new roof, or paint the house every 5 years, or need an air conditioning unit, that takes a large amount of money that you need to have in any given moment. So it's the same way with the credit system. The scores are designed to be able to hurt you If you are using credit irresponsibly, and using personal credit to fund a business is the definition of irresponsibility. That's why SCORE, Inc., SBA, all of these sources say you must separate consumer and commercial credit. You must. There's not even a choice. You have to, because consumer credit wasn't designed to fund a business. You will dramatically lower your scores if you're trying to do that, okay? And don't forget that, a lot of businesses fail. The majority of them, a quarter of businesses fail in the first year. So of all the businesses that start, 25% of all of them, they're done in the first year. So if you're using your consumer credit to fund the business and the business were to not work out, then all of a sudden you have all this consumer debt, and it basically takes you down a personal bankruptcy road just because you're trying to use your personal credit to be able to fund your business. So some things to think about there. Taigo says, howdy from YouTube. Thanks for tuning in. Angel says, hello. Any tips for funding a franchise? Yes, a lot of tips, Angel. We'll talk about that. And Robert says, hello. Thanks. And Angel, a lot of this, what we're talking about, will help you with funding a franchise as well. Some other great funding franchise money is credit line hybrid, which we'll talk about, which, by the way, wouldn't be available if business credit didn't exist. And other ways, if you have some kind of collateral, 401k, stocks, bonds, IRAs, or if the business has revenue, that could be used to qualify you for all kinds of financing as well. So our number will be on the bottom of these slides. Give us a ring. We'll go through and tell you all the options that you'll have, but those are some off the top of my head. So with no business credit, how do companies really know which companies are reliable? It's something else to think about. We think about getting loans. We think if we don't have commercial credit, that we can still get loans. But here's the reality. Lenders rely on business credit reports to determine if you should be given money, how much you should be given, and the rates and terms that you're supposed to be given. So think of it like this. If there was no consumer credit in the world, do you think there would be mortgages? Do you think people would give you home loans if they had no way of seeing how you've paid other bills? Probably not. Same thing in the commercial world. If commercial credit doesn't exist, then other people can't look at your credit report to determine if you should be given a loan or you should be given a credit card. And you need to know that nearly 100% of the time, when you apply for a loan, when you apply for a credit line, when you apply for a business credit card, they're pulling your commercial credit. Now, you might not know that, and here's why. There's a law called the Fair Credit Reporting Act, which actually came out in the 70s. That law requires somebody get your permission to pull your consumer credit report. It's called permissible purpose. Somebody can't just pull your credit report without your permission as a consumer. But your commercial credit reports are public information. They're not regulated under the FCRA. So what's happening is lenders and credit issuers pull your commercial credit report all the time. But you don't get a letter in the mail that you got denied and that they pulled your report, because they don't have to tell you that. So they don't tell you that. If you get denied because your business credit doesn't exist, they don't tell you that. And that's why so many people don't realize the value of business credit. But if you don't have business credit established, lenders have no way of seeing how you pay your bills. They have no way of seeing your commercial credit reports. So you would see a fraction of the lending, the loans, the credit lines, the business credit cards you'd like to get. You're right now, if you don't have business credit established, you're seeing a fraction of those that you could have got. Maybe you're not getting approved for hardly any of them. And the ones you do get approved for, you're paying a higher rate, you're getting less money, okay, which means that you have less limit and a higher interest rate, which is not what you want. Business credit is what makes it possible to get long-term loans. For example, SBA. You can't get a 20, 30-year loan from SBA unless you have business credit established. Those are the longest loans in the industry. Outside of SBA, which is 20 and 30 years, the most common loan term is 5. Imagine having a loan you pay back over 5 years versus 30 years. You know the difference in payment on those? It's significant. I'll give you an idea. We got a loan for $75,000 and paid $9,000 a month to pay it back over 3 years. $9,000 a month for a $75,000 loan. We got a $350,000 SBA loan, right? That's 4 times, more than 4 times the amount. And our payment was only $4,000. 4 times the amount of money with a payment half as much. That's how important loan term is. But you'll never be able to get long-term financing if you don't have business credit established. You're only going to be looking at very short-term financing, which will give you very high payments and make it nearly impossible to ever borrow large sums of money. So again, it's very important because the business credit reporting agencies create these proprietary formulas to evaluate risk. And then people that lend money, suppliers even, credit issuers, lenders, they rely on these algorithms to determine if you should be lent money, how much you should be lent, the rates and terms. And if commercial credit didn't exist or you don't have it built, those algorithms try to go get it and see there's nothing there. And it even results in a denial or, again, worse terms and less money than what you could have got if you actually built business credit. Because, again, business credit's what's used to determine the risk of your business for lenders to be able to give you money. Robert says, hello, thanks for tuning in. How do you fix your Dun & Bradstreet? You could do that directly from Dun & Bradstreet. They used to call it iUpdate. Now they actually call it their dashboard. If you go to Dun & Bradstreet, get set up for their credit reports, they have a dashboard that actually allows you, even if you don't get your credit reports, you can go to D&B's dashboard and dispute or update information directly with them. Again, it used to be called iUpdate, but they have now changed that, probably because they never owned iUpdate.com. Don't know why that's the case, but that's why they fixed that. And Dane says, love the consistency and facts. I appreciate it, Dane. Thank you very much. So again, all I can say is that it would take a large amount of credibility that you build over time to ever be able to get trusted by lenders and credit issuers if we didn't see that commercial credit reports existed. So a lot of reasons here that are very good for you to be able to have business credit, because with it, it opens up the door for your business to fund itself. It opens up the door for you to create a credit profile for your business and get money based on that, not your personal credit profile. It keeps money off of your personal credit reports. There's not inquiries there. You're not putting credit cards on there that show that you're using them for a business and hurt your utilization. All of that stuff is in the commercial credit world instead. Okay. There's also all this financing that opens up, fintech, online lenders, marketplaces, SBA loans. All of this is based on business credit quality. It's a factor in there. So again, having business credit makes it make all of those different types of funding options available to you, where without it, you're not going to find that. So with business credit, your personal credit scores are protected because you're building credit for your EIN that's not linked to your social. You don't have to gamble your house and your personal assets and your stocks and bonds and take lines of credit against your home and put your personal assets in jeopardy. You don't have to do that. You could build a credit profile and let that help you get the funding for your business. It's a way for your business to fund itself. Okay, any business can qualify. So unlike loans where high-risk businesses, high-risk industries can't qualify, and for example, a restaurant is a high-risk industry. I saw a daycare listed as high-risk with Experian. So high-risk industries can still get money with business credit and still get it at good terms where you're not able to do so without business credit. New businesses can build business credit, whereas if you didn't have access to business credit, it's very limited the amount of funding you can get because the majority of startups fail. So it's very tough. But with business credit, you're able to get large amounts of money even as a startup business. With business credit, you work with information that's current, accurate, unbiased, as the business credit reporting agencies are putting that stuff together so you can make better decisions of who you lend money to. If you're, for example, a supplier and your customers need you to issue money or give them things, like you're a supplier supplying them and you want to make sure that they actually pay their bills. And again, that gives you the ability to make more confident decisions as well. You don't have to go for grants. You don't have to use crowdfunding. You don't have to spend countless days and months of your life trying to solicit venture capitalists and angel investors and give up equity in your business. None of that has to happen with business credit. You're able to get the money you need to fund the business without any of that stuff happening. So it's a great way to fund a new or existing business. You don't need collateral to get it. You don't need good credit. You don't need cash flow. You don't need a credit partner to get it. The reason these four things are important is that if you want any kind of loan or credit line at all, you have to have one of these four. It's impossible to get money without one of these four. But with business credit, you don't need them. So in all these situations where without business credit, you just couldn't get money, with business credit, you can get money. And again, I've seen people go from a 1-truck operation in the transportation industry to 50 truck operations in the transportation industry, strictly fueled by business credit. Okay, I've seen many multi-million-dollar companies become what they are because they're strictly fueled by business credit. It gives you the ability to get money when you just can't get money elsewhere. So it's such an important step to take because it's really the key to not just letting your business fund itself, but to also getting you to a point where you're able to actually be able to get the money for your business, even if you can't qualify a lot of other different ways. And Yemaine says, how hard is it to change my business address? It's very easy. First of all, only do it once, man. Don't do it again, because it's really hard to change your address. Everywhere online, your address is listed. So if you want to change your address, here's exactly how you do it. Find a virtual address. It's the best way to go. A virtual address, you can move locations, you can do all these things and still keep one address for the lifetime of your business. You can go to creditsuite.com/virtual to find our source, which is Alliance, or you can go to Regis, Alliance, DaVinci, and get one set up. Then use a service like Yext, Y-E-X-T, or something similar that's cheaper to update all of your records online. Update your Secretary of State, update your bank account, update your Yellow Pages, your website, your social pages, update all of that. And if you do that, you can absolutely change your business address. Vanessa says, hey, Ty, can you save the live, please? I'm late. I have a Regis virtual address, and Google wouldn't let me list the address and suspended the Google listing. Should I not use Regis? You can use Regis. We recommend Alliance, and I would try Alliance, but we had a lot of issues with Regis, which is why we stopped using them or recommending them. You can go to creditsuite.com/virtual and try that. I think that'll be more successful. And yes, you are watching on YouTube. So once we are done, this will actually show for you. You can go right to our channel. And if you subscribe to our channel, then you'll be able to access the playback. If you haven't subscribed, everybody like and subscribe so you get notified when we go live. Dane says, what if I have a virtual mailbox, but the location is UPS store? It's not a virtual address. If you have a real virtual address, it's not a UPS store. Mailboxes like iPostal or USPS, or excuse me, iPostal or UPS, those are housed in a database that lenders and credit issuers pull information from, and they know their mailboxes. And so they're not going to treat it the same as a virtual address. It's two completely different things. And that's the worst kind of address you can have, so you know that. Anytime mailbox, Dane, I know there's iPostal. There's a lot of them. Those are not real virtual addresses. It's why they're so cheap, because they're just UPS type addresses, and lenders and credit issuers know that and will deny you. Tanya says, what about changing my address to virtual in the Secretary of State? You could do that. Some states are weird if you're using things like Regis, but most other states are absolutely fine. You have no issues. And the only time I've really seen an address issue with virtual address is with DMV. They won't let you get a DUNS number sometime with a virtual address, but you can still update your profile to a virtual address later with them. So that works. You're the best. Thanks, Dana. Appreciate it. So, and again, in a world with business credit, it's hard to break, and without it, it's hard to break into any industry. Okay, you would be basically only succeed if you are wealthy and putting your own money in, or you have people around you that are willing to put their money in. If you don't have that, it's going to be really tough to get money a lot of other ways. And that's the battle a lot of you are having now. You're trying to get loans, you're trying to get credit lines, you're trying to get money to get a business off the ground or grow it, and yet you're ignoring business credit. And what you don't understand is it's like you're swimming a river upstream, right? It can be done. It's just really hard to do. Like, I'd rather be swimming the river downstream. Like, that works pretty well. Okay. But that's the problem, is that with business credit, it's like turning around and going downstream in that river versus going upstream. It can be done upstream, but it's very difficult, because as you've seen here, a lot of lenders, a lot of credit issuers, suppliers, they're looking at business credit to determine your worth. If you're using personal credit, you're damaging it, what makes it more difficult to be able to get the money that you need. There's so many other reasons that not having business credit will hurt you, not to mention that you become personally liable for everything in your business, which I don't care how smart of an entrepreneur you are. Okay, the bottom line is there's no reason to put your family finances at risk if you don't have to, and business credit helps you get around that. We've got a great guide at creditsuite.com/live that will get you, teach you how to build business credit. Creditsuite.com/live maps out the exact steps to build business credit. Creditsuite.com/live-27 get you a great guide on getting financing as well. And if you like this, do me a favor, punch that like button, subscribe to the channel. We'll notify you when we go live. We go live Tuesday and Thursday at 1 p.m., 11 o'clock a.m. on Wednesday, all Eastern time. We have daily tips on Instagram, on Twitter, on our other channels as well. So you can check that out all at the top right of our page, creditsuite.com, and subscribe to our podcast. We have 350,000 downloads on our podcast. So a lot of people are listening on the go. And it's not just me like this. Our podcast has a really unique format that you only see on our podcast, which is other industry experts in all kinds of fields coming in and teaching you cool things that will help you run and scale a successful business of 7-8 figures and beyond. So make sure you tune into our podcast. If you have any other questions, reach out to us, 877-600-2487. When you call us on a consultation call, we will get your business credit reports for free with Dun & Bradstreet Equifax Experian. That's $250 if you go to them direct for what you get for free. We'll review the reports with you. We will do a free search to see if you're set up at the reporting agencies. We'll do a free fundability assessment for you and a free funding assessment. So the fundability says, how fundable are you? How lendable are you right now? We can tell you that. We can also tell you all the money you can qualify for now. All of that happens on one phone call. If you look at the hundreds and hundreds of reviews we have online, you'll see a lot of the reviews are how solid the phone calls are with our team. Okay, one of the reviews I saw yesterday literally said it's the best phone call they've ever had. So a lot of value on these calls. If we can help you get credit financing, give us a ring. We'd love to talk with you more. Dane says, can we get the credit line hybrid without up-to-date business tax filing on personal credit? You do not need to have your taxes filed to get the credit line hybrid. Credit line hybrids where you're able to get up to $150,000 in real credit lines, no doc, 0% rates. You can get them as a startup. You can get them in a high-risk industry, all because they're business credit, okay? And all you need is a 680 FICO score of that or a guarantor. If you have that, you can come in and get up to 150,000 credit lines right away. For those people that don't know, give us a call. We can talk to you more about credit line hybrid. Marcus, hey, thanks for tuning in from YouTube. And Willie from Facebook says, hey, you're the best. How would hybrids help my business credit profile? Credit line hybrids, the way that it works is this. So credit line hybrid is we get you with the funding source. It gets you 5 to 8 different individual credit lines. If you have good personal credit, 680 FICO score higher, then 3 to 5 of those will usually report to the business credit reporting agencies. So now you have 3 to 5 credit lines on your commercial credit reports, right? You could max those out, not affect your consumer credit score. But the cool thing is you start building a credit profile with 3 to 5 high limit credit lines. So what happens is as you use those credit lines, then when you start building business credit on top of that, then the other limits you get are really high. It's like pouring gasoline on a fire. That's what ultimately credit line hybrid is. You're going to build business credit way faster because you start the profile with 3 to 5 high limit credit lines on the report. That, Willie, is exactly what credit line hybrid will do to help you build business credit. If you want to learn more about credit line hybrid, give us a call, 877-600-2487. We'll talk to you more about that as well. I'd love to chat, Marcus. Well, hopefully that helps you. Feel free to give us a ring, Marcus. That is my number, 877-600-2487, info@creditsuite.com as well. Thanks, everybody, tuning in. I will see you tomorrow at 11 o'clock Eastern. We talk about more cool ways to get money for your business. Thanks, everybody. Don't forget to like and subscribe. Have a great day.